Good afternoon and welcome to the latest issue of Playprint 21, coming to you from the stock market. The Playprint 21, the weekly video news bulletin for the Australia and New Zealand print industry. This issue is sponsored by Ball & Doggett, Australia's largest supplier of printable materials and press room consumables. And what a big week it's been, as usual in the ever-dynamic print world. As it waits for the ACCC to approve its bid for stricken rival Ovato, diversified marketing services provider IVE saw all its figures rise in its full year results. And the company is now poised to enter the packaging market. IVE revenue for the year was up 15.6% to $759 million, EBITDA was up by 13.3%, net profit after tax rose by 66% to $33.1 million, excluding JobKeeper, those figures. IVE bought Active Display Group and AFI Branding in November, of course. Matt Aitken, CEO at IVE, said, "We're encouraged by the uplift in revenue during FY22, and while the macroeconomic environment remains somewhat uncertain, I'm optimistic about the year ahead, given our demonstrated track record, business fundamentals and strong market position." IVE said the company, which now has 1,800 staff, had seen bounce back across most parts of the business as the economy emerges from the COVID era. Following a strategic review, IVE will now move more aggressively into the packaging sector and is actively seeking an appropriate acquisition to expedite this strategy. It set aside $30 to $40 million to fund this and any other earnings accretive opportunities that arise. Competition and Consumer Commission ACCC now has all the submissions on the proposed takeover of Ovato by IVE and is seeking to come to a decision on the deal in double quick time. IVE's aiming to buy the business. It's not yet known if it's going to buy all of it, part of it, just the business, the presses, how much of the kit. But Ovato has heatset plants in Brisbane, Perth and the super site in Warwick Farm. EPAC, the business that began 6 years ago and now has 24 plants around the world, including one in Melbourne that opened in May, is already planning to plant another plant in this region, either Australia or New Zealand. A location yet to be decided. It will be built sometime in the next 18 months. The new plant will almost certainly be based on the Melbourne operation, which runs 2 HP Indigo 25K digital flexible printing presses and 2 pouch making lines. The EPAC model around the world is to work with a new brand of entrepreneurs offering small businesses what it says is big business marketing through providing short-run, on-demand, fully printable, cost-effective pouches for foods, pet foods, lollies, snacks, nutritionals, coffee and the like. Printing on the whole pouch enables the entrepreneurs, says EPAC, to optimize the real estate rather than buying standard pouches and sticking a label on it, and so to compete in the perception of the consumer with the big brands. Global packaging juggernaut Amcor says it will continue with strong growth in the new financial year, after reporting upticks in all its figures for 2022. With the fourth quarter, it says, the best of all. The company has just upped its stake, in fact, in EPAC, the digital flexible packaging printer that's now expanding, and says it will make similar investments in new technology businesses as the opportunity arises. Amcor now has 225 plants around the world and said 2022 was an outstanding year, with CEO Ron Delia saying the same, in fact, would be the case in 2023. Speaking at a conference call on the results, he said Amcor has grown organically through acquisition and in value. Delia said this is our third consecutive year of accelerating top-line growth, and we expect to sustain this momentum for 22-23. For this year, net sales are up 13% or 4% on a constant currency basis. EBITDA rose by 4%, 7% on a constant currency basis, while net income rose by 6% or 8% on the constant currency basis. Up to $1.2 billion net profit. Rapidly growing signage group Easy Signs is investing in Zund as its digital flatbed cutter systems to power its automated precision finishing. That's at both its Australian and soon to be open USA sites. At the Sydney site, Easy Signs now has 4 Zund cutters with a 5th on order, all supplied by Style Eaton. While over in the US, General Manager Steph Talty, who moved there to open the plant from Sydney, has taken initial delivery of Zund G3 and the Zund D3, both supplied by Zund America. The US plant will be almost a duplicate of the Australian operation, with production, speed and automation the priorities. Following what the company says was a positive response to its debut at Packprint, for the product in mind, Curry Group has officially launched HP XR Services, a mixed reality platform which it says will transform service delivery on its range of HP Indigo digital presses and on its entire product range, in fact. Like other augmented reality platforms, the headset combines real-world visuals with superimposed information. allowing the virtual coach, wherever they are, to see exactly what the operator on site sees and to collaborate to diagnose, identify and workshop issues. Omedia has reported a 10% increase in its revenue to the half year for Omedia, $276 million, with key performance metrics, statutory metrics all rising. EBITDA up 62% to $51 million. The company, which owns leading wide format printer Cactus Imaging, says a combination of print and digital drives best ROI, according to its studies. Finally today, the 5-year saga over the alleged $450 million worth of accounting irregularities at Fuji, or was Fuji Xerox New Zealand and later Australia, is over, with the parties settling out of court. The scandal came from the time Neil Whitaker was running first New Zealand for 11 years and then was MD of Australia at Fuji Xerox for 13 months. Together with other former NZ execs from that time, Whitaker was alleged by Fuji Xerox to be responsible for the huge losses. Fuji Xerox also sued the auditor, EY, claiming that with the exec, EY was responsible for $174 million in unrecoverable intercompany advances. The trio of leading execs were also sued by Fuji Xerox for $3.7 million in commissions and bonus payments, which is said were made on overstated results. The former Australia director and the EY auditor have also had their cases settled out of court. That's it for this week's issue of Playprint 21. For all these stories and more in full, go to print21.com.au. Thanks to our sponsor Ball & Doggett, Australia's largest supplier of printable materials and press room consumables. This is Wayne Robinson signing off in results season from the Australian stock market.